Well, it's not a rip-roaring recovery after yesterday's tumble in India's equity markets. The benchmarks opened with gains of about 0.2% each, and they have built on those gains. So it's positive signs at this point, but not significant in the context of yesterday's 3.5% tumble. So as of now, you have the Sensex that is trading at above 48,000 levels, and the Nifty that is trading at maybe close to 14,400 at this point. The market breadth certainly looks quite good at this point. At the start, you have 40 gainers or thereabouts on the Nifty 50 and about 3 gainers for every loser on the broader markets. So positive signs. What are the individual stocks that you have to pay attention to on the Nifty 50? You have ONGC, that's the top gainer. You have UPL and M&M that follow ONGC, all of them with gains of about 3% or more. And quite a few of the metal counters that are making their way back in trade today after getting quite the hammering in yesterday's session. In fact, so are the Bajaj twins. They're doing reasonably well today, and quite a few of the names that took a battering in yesterday's session are gaining back a little bit of ground. So there seems to be a buying on dips for quite a few of these individual counters. On the losing side, the biggest loser is Tata Consultancy Services, and I do not know whether to be surprised with this or not, because this is consistent with what we have seen in the recent past, where it builds momentum, it gains strength in the run-up to the earnings, and then after the earnings, which by the way were reasonably good, it loses ground on the next day. So it's down over 4%. It is the biggest loser on the Nifty 50 at this moment, and in fact it is dragging the sectoral index as well. Now let's zoom out and look at the broader markets then, and the broader market indices gaining over 1% each, so it's looking quite decent. But remember, yesterday they both lost, the mid cap and small cap index, they both lost over 5% each. So this is just a bit of ground that is being clawed back at this stage. Most sectors are looking decent today, apart from the IT sector, which is losing about 2%, TCS proving to be a drag, and the Nifty pharma is also looking a little flat after initial strength. So all of the other sectors are looking positive at this point. The Nifty Bank is gaining over 1%, so are the auto and the FMCG indices. Now, what are the overarching factors that you will want to pay attention to? First of all is the flows. Yesterday, foreign institutional investors were quite the big sellers, net selling about 1,750 crore rupees worth of equity. DIIs bought a couple of 100 crore worth of equity on a net basis, so they weren't nearly enough to close the breach and to counter the pressure of selling that was brought in by the foreign institutions. So you'll have to watch out for the flows today. If foreign institutions end up selling significantly, will domestic institutions be able to deal with that pressure, or will we see further declines from this point? So what are the factors that could determine that? Well, the COVID-19 crisis clearly is something that is front and center, and Maharashtra's response to that. Remember, there is buzz at this stage, but there is no clarity about what sort of restrictions Maharashtra could impose. There is talk of a lockdown of 2 to 3 weeks, but again, the fine print of that lockdown is not known. Is there going to be a broad-based curbing of activity, or are there going to be exceptions to the rule? Is it going to be different from what we saw last year? In that, could manufacturing units be allowed certain leeways that they were not allowed last year? So all of those things will be critical to watch out for. If you hear something before market hours or before the close of market hours today, perhaps that will determine which direction markets go and where we close on Dalal Street today. But if not, we could hear something tomorrow, and tomorrow, remember, is a market holiday. We're also building up to Infosys earnings. You'll find all the updates on ET Now. Thanks so much for watching. Do stay tuned for a lot more.